Hello traders, Gary Wagner here. It is approximately 11 a.m. in Honolulu, 5 o'clock in New York City. It is the 16th day of April 2012, Monday, and this is the daily report for gold and silver. Trading well off of the lows of the sessions overseas yesterday. Currently, we do have the precious metals markets mixed with gold trading off about $6 on the day. Current bid 1651.74. As you can see on the screen, the low has been 41.90 and the high has been 59.50. We have silver currently trading unchanged to up a penny. Currently, as you can see, 31.47. 31.13, that has been the low of the day, and 31.76 has been the high on the day. Traders, today I want to spend a couple of moments talking to you about a triangle correction and some of the tenets that R.N. Elliott put down in his documentation when he went ahead and described the various components that will make it up and some of the things to look for. One of the things that R.N. Elliott talked about was that typically in a market, you are going to have an alternating pattern between 5 and 3. And what is meant by that is if you have a 3 count, 1, 2, 3, your next count should be a 5 count, 1, 2, 3, 4, and then 5. Same way, 3 count, 1, 2, 3, and then your 5 count, 1, 2, 3, 4, 5. That would mean that this leg up right here is going to be composed, if it follows Elliott wave tenets and rules, a 3 count. So when we look at it in that way, we have had our 1, we're probably in our 2, and then we're going to have a third leg up. When we look at it in that way and then go ahead and look at a chart which kind of breaks that down a little bit, this being the beginning right in here, what we're probably going to see here then, of course, this is a misprint. It's about 1611, but we've got our 1, we'll have our 2, and then we'll have our final leg 3, which should stay within the confines, of course, of the triangle itself, the triangle correction itself. So we are getting a small retracement in the market, a correction, there's no doubt about that, but I would expect this to be the last leg down as we go towards the top of the triangle or the resistance point itself. You know, as we look at gold and how it is traded off, this is a weekly chart. This is June gold off of the COMEX, and you can see how it's traded from about 1800 to this intraday low, I believe, 1611. A lot of it has to do with the dollar, and the dollar specifically against the euro dollar. Now, we did have gold much lower in the evening session, and the euro dollar, in fact, reached a 2-month low yesterday versus the dollar before beginning to rebound. And it is that rebound, I think, that we're seeing as we have gold come off of these lows that we're witnessing right now. When we take a look, of course, at silver, and as you can see, silver continues to trade really within this very, very tight consolidated range here. You can see that it did take a stab. This is a 720-minute chart to come up near about 3250 before tracking all the way back down to the lows. And when we take a look at silver and see silver in terms of our Japanese average or Heikin Ashi, you can see that it has not only come off the lows, these are the extreme lows down here, but what I tend to look at with the Heikin Ashi really are the bodies, and you've got the lows off of these bodies, and for the first time in, and again, this is a 420-minute chart, so the first time in the session, you can see we have gone back to green. They're very, very small, but the first indication you will get typically in a market that is reversing is the fact that you get a smaller body size in the red candles, which we're getting, and then that basic reversal candle, which typically is very small and doji based. It looks like we are getting that here. Obviously, maintain your position in silver and in gold. We'll take a look as this week develops throughout the week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.